Hello guys, it's Simo from Investment Research. As every week before the market opens tomorrow, November 17th, we have to discuss the key insights on SoFi stock today. On November 16th, I'll cover three main questions that investors are buzzing about. First, the SoFi stock prediction for the week of November 17th, 2025 before market open. Second, the overall forecast for SoFi stock. And third, any upcoming or recent IPO related to SoFi, and of course my recommendations. Let's get started. First up, SoFi stock prediction for the week of November 17th, 2025, before market open. As of the last close on Friday, November 14th, SoFi finished at $27.82, down about 2% from the previous session, but it saw a slight after-hours bump of around 41 cents. Looking ahead to the week starting November 17th, which is tomorrow Monday, short-term models suggest an opening around $27.81 as a fair price, with potential daily ranges from a low of $25.08 to a high of $29.44. Other forecasts point to a modest dip early in the week, possibly hitting $27.07 on November 17th, but with positive dynamics overall, targeting around $28.05 by week's end and volatility of 3 to 4%. Keep an eye on macro news like economic data or tariff updates as they could sway sentiment. SoFi's been volatile, up over 112% year to date, but down 23% from recent highs. If institutional buying picks up, we could see upside toward $29 to $30. Otherwise, support around $25 to $26. Moving on to the second point, overall forecast for SoFi stock. Analysts maintain a consensus hold rating with an average 12-month price target of $25.06 to $27.21, implying a potential 4 to 10% downside from the current $27.82 close high targets reach $38, while lows are at $12, reflecting mixed views on its fintech growth versus risks like high valuations, potentially overvalued by 230% based on excess returns models and exposure to personal loans in an uncertain economy. Longer term, optimism is higher. Projections see SoFi climbing to $55.30 by 2030, with 10% annual revenue growth, fueled by AI tools, BNPL expansion, and crypto revival under potential deregulation. Recent Q3 2025 results showed 36% year-over-year revenue growth, but sentiment has cooled due to subprime lending concerns. Overall, it's a high-growth play, bullish if macro improves, but hold or trim if volatility spikes. Finally, the third question, upcoming or recent IPO related to SoFi. SoFi itself isn't pursuing a new IPO, its original went public in 2021 via SPAC. Currently, SoFi's IPO center has no active offerings as of November 2025. However, a notable recent IPO with strong ties to SoFi is Figure Technology Solutions, FIGR, founded by SoFi's former CEO Mike Cagney. It went public on September 12, 2025, raising $663 million at $25 per share on Nasdaq, aiming for a $4 to $7.4 billion valuation. Figure focuses on blockchain-based lending and HELOCs, with strong Q3 results and partnerships. It's up 5% recently, but down 22% in the last month. Analysts see up to 56% upside. No other direct upcoming IPOs for SoFi were announced, but watch for secondary offerings like their July 2025 one. Okay, as an equity research analyst focusing on fintech and growth stocks, my recommendation for this company is to hold current positions for existing shareholders, while suggesting selective buying on dips for long-term traders targeting fintech exposure because this point is so important. In my view, this is based on SoFi's robust fundamentals, including consistent earnings beats and upward estimate revisions, but tempered by elevated valuations and near-term macroeconomic risks like potential tariffs and consumer lending pressures. The stock has rallied 112% YTD as of November 14th, 2025, closing at $27.82, but trades at a premium that could lead to short-term pullbacks. For traders, focus on entry points below $26 for potential 10 to 15% upside in the next 6 to 12 months, supported by growth in AI-driven services and BNPL. As a stocks analyst, SoFi's strong fundamentals really stand out to me. It's got that bullish edge, with Q3 2025 revenue jumping 36% year over year, smashing estimates thanks to booming member growth and fresh services like banking and investing, plus EPS beating expectations by about 49% on average lately, which makes me think the upward revisions are spot on for what's coming. That said, the valuation gives me pause as a cautionary note, with analysts mostly calling it a hold and setting 12-month targets around $25 to $27, hinting at a bit of downside from here. The stock feels pricey at these multiples, especially with risks like tariffs hitting consumer loans hard, so I'd personally watch for any overvaluation pullbacks before jumping in big. For trading, I'd personally hold what I have and snag more shares on dips under $26 to aim for 10 to 15% gains short term, or build a longer position during weakness if you're in for the haul, expecting 20 to 30% upside over the year, always keeping stakes small to handle the swings, and eyeing those Q4 earnings as a potential game changer, especially if the results were exceptional, like in Q3, we may see strong price action. That's it for this week's preview, guys. Remember, this isn't financial advice. Do your own research, like and subscribe for more, and I'll see you next time. Cheers.